Hey, my construction entrepreneurs. It's Tyrone Jones with the Construction Entrepreneur School and Services. And on this course, we're going to talk about how to calculate margin. Okay. We're going to talk about gross margin overview, the importance of knowing your gross margin. Why is it important? Why do we need to know that as construction entrepreneurs? And how to calculate that gross margin. Okay. All right, so there's some terms and that you need to understand to help calculate your gross margin and even your markup percentage. Okay, which are two different terms here. Okay, so first is revenue, and mind you, we're talking about margin and markup. It doesn't matter. These terms you're gonna need to know to get to both percentages. Right now, we're only going to talk about margin, okay? So revenue is the income you earn by selling your products and services. Revenue is the top line of your income statement and reflects earnings before deductions. Important to understand. Cost of goods sold include the expenses that go into making your product or providing your services, right? That could include materials, direct labor costs, and such. Next is gross profit. That's revenue left over after you pay the expenses of making your product or providing your service. Okay. You will use these three terms when finding both margin and markup. Understanding the terms will help you grasp the difference between margin and markup. So gross margin represents the percentage of total sales, right? That's sales revenue that a company retains after incurring the direct costs associated with producing the goods and services sold, okay? The higher the percentage, the more your business retains on each dollar of sales to service other costs and obligations. But gross margin is so much more than that. It's a measure of your production efficiencies, and it determines your break-even point. This is why it's a key calculation to assess your business startup, your risks, your profitability, and much more. Every construction sales needs to, you need to understand you need to know your construction sales, your overall revenue to get to the gross margin. Okay, understanding your direct costs. These are numbers you need to know to understand and grow your company. And if you don't, then you're not going to be able to move to the next step, which is knowing the importance of your gross margin. Okay. Knowing what your gross margin is on every product throughout the life cycle of your business and acting on any variations you detect can help you identify these problems before it's too late. Understanding and monitoring gross margins can help businesses owners avoid pricing problems, losing money on sales, and ultimately staying in business. If you don't know what your gross margin is, then you can't even know where the errors are happening on your income statement. Okay, you're going to fail on money issues in a lot of areas. Many businesses that appear to be thriving fail because they're charging too low. They're not making enough money. They're not even making profit. Okay, establishing a low price strategy is tempting. Everyone wants to charge that next lowest price than the competitors. But dealing with cutthroat competition, however, is rarely sustainable and can be tough to increase price later, even with a loyal customer base. Know that. So using gross margin calculations and other factors as you plan your business can help you avoid pricing mistakes before it's too late. Okay, so this also falls under the category of cost control. Okay, now this is cost control is a tough thing sometimes to get your staff on board with, and this is why it's important to have a account manager, office manager, someone that's in the administration and handling the finances, the accounting, the accounts payable, accounts receivable, tracking job costs. That's why it's important to have someone good. And mind you, having someone that's in accounting and finances is part of the initial key roles that you need to fill when growing out your business, right? You need someone to run operations. You need someone to understand accounting and financing. You need someone in sales, and you need someone in estimating, right? We don't want to mix up the estimating and sales the same, because we know estimators are not good salesmen and salesmen are not good estimators, okay? So one of the things you want to look for here is that, for example, a higher cost material may make their way into your production process, and this could be something as simple as a foreman using a higher quality product or buying a 5-gallon of paint instead of 1 gallon that was budgeted for that project. You would know. Long as you know your gross margin, you'll know how to catch these errors that are happening in your business day to day, job to job. Okay, calculating gross margin is easy if you've been in business long enough, right? Because you have some record keeping, you have some data that you can build from and use. When you don't have that data, then you need to kind of search for similar type companies that can help you. Make it easier for you to come up with your gross margin. If not, then it's going to be a little tricky and a little tough there. You got to start looking at data over a large period of time, maybe a year, and break that year data down into quarters. Okay, and then you would take that quarter, that company total's revenue, total sales for that period, and then we will use that number to get to your gross margin number. Okay, so let's do some calculations here. Let's say you were awarded a project of 20 grand. Okay, $20,000 project, but it costs you $9,000 to get this job done. Okay, so to find the gross profit, because we need to figure out the gross profit to get to the gross margin. Okay, so to find the gross profit, we'll take that revenue of 20,000, right, and subtract it by the cost it took us to do that job. The cost to do that job is 9,000. So that leaves 11,000, which falls under the gross profit category. Okay. So now we want to find a margin. Okay. So now we need to divide the gross profit, right, which is 11,000, by the revenue. The revenue is 20,000. That's what we were awarded with, right? That's the sales. So 11,000 divided by 20,000 is 0.55. So you get a total of 55%. So your margin is 55% for that. That margin means you keep 55% of your total revenue. Okay. The other percentage is spent on other things. Now, mind you, when we talk about, I'm going to take it back a little. We talk about gross profit. Okay. The gross profit, you still need to take money out of that gross profit. Now I'll do a video on gross profit another time, but the 55% is your gross margin. Okay, margin measures how much of every dollar in sales you keep after paying expenses for that project. Example, you keep 55% of every dollar you make. The greater margin, the greater percentage of revenue you keep when you make a sale. Okay, calculating gross margins for a startup. Okay, you don't have no reports to go by, right? So you don't know you don't have much data to use, much numbers to use to figure out your gross margin. But you can still somewhat figure this out by doing a little bit of work, figuring out what is the average for your industry. Okay, do a little research on different companies. Some of the information may not be public, some may. So you can kind of get an idea of where the average is at, and then do a rough estimate as where your margin should be. Okay, and you can easily do that by using Google. Okay, and you also got to remember, once you do this, it's going to decrease over time. Okay, you're going to reduce costs. You're going to get better at doing things, and you also got to realize that that number is going to get better over time as you get more data. Okay, you're going to get more confident in that number. So that's how you come up with gross margin in your business. And this is another tool on learning your numbers when running your construction business. Knowing your numbers as a construction entrepreneur is very important. So I'm going to leave you with that. Hopefully you guys learned a lot from that. You can take that, apply that to your business now, or to a business that you're looking at starting in the near future. Okay, don't forget to subscribe now. Go ahead and subscribe. Don't forget to subscribe. Okay. Also, too, don't forget to like if you like this video, and share it and comment. Okay. leave a comment. You have questions. Maybe you got hung up on a formula somewhere. Let us know. Reach out to us. I'll make sure I contact or respond to every comment that's out there. I don't miss many of them. So thanks for attending. Appreciate it. Subscribe, like. Make sure you put on the notification button for any new videos we're posting. And I'll leave you with that. Remember, hustle hard. And after that, hustle harder. Thank you for your time.